absolutely flat right now. Let's talk about Chola next. The stock has been a bit of an underperformer. Of course, it's if you stretch that timeline out a little bit, it's one of the best performing names. In the third quarter, the company saw degrowth in the new business segment disbursals. Of course, it's been a conscious kind of a move from the company. We have Mr. Arul Selvan, President and Chief Financial Officer at the company, joining in to take some questions. So, Mr. Selvan, great to have you back on the program. Thanks very much. You know, the last time we spoke with you, sir, this was at the end of, I think, Jan, you said that you are recalibrating growth on the fintech-led unsecured personal loans business, right? And you've been, I think, for the last 2 quarters, guiding for some slowdown on the asset growth side. Could you talk to us about how this quarter so far is panning out? Overall, for the business, for the new business segment in particular. And second, lately we've seen so much more from the Reserve Bank of India. And the general impression the street is making of some of these circulars, etc., is that, RBI is kind of stepping up. A lot of it, of course, is compliance-led with individual cases, etc., you might have noticed. So I just wanted your thoughts on that as well. How is that impacting any decisions you're making in terms of how you are sort of conducting business? Go on, Mr. Selvan.
Yeah. So disbursement is doing well. As a matter of fact, quarter over quarter, that's Q3 over Q4, we should be better than Q3. But as I was indicating earlier, last year Q4 was a very good quarter. Last year Q4 versus this year Q4, you may not see a 40%, 30% level of growth levels, which we have seen in Q1 and Q2 of this year, primarily because the base was low. So you'll see growth happening. Growth is happening in used, growth is happening in PV, growth is happening in construction equipment. And heavies have also started growing a bit, so we should have a good growth. LAP and HL, which are our, the old products, which have now been scaling up in other geographies, is also doing good. So their scale up will also be, bringing in higher disbursements and thereby bringing up the closing assets. Net, I think we should have a decent growth. As I was indicating earlier also, the asset growth should stabilize at around 30% levels for the current financial year over previous financial year. With regard to the RBI circular, I think I wouldn't want to comment anything. We are not into those businesses like a gold loan or into lending against shares, etc. So we are not concerned. And as far as our RBI audit and other regulatory forbearance, we have had good relationship and we have not faced any challenges with regard to any of their comments during the audit or post the audit.
The partnership business, Mr. Selvan, how is that? Could you give us some color? How is that panning out?
Yeah, the partnership business is now again. Earlier you have seen the growth to be a little higher because the base was lower. Now it is stabilizing. Yes, consciously we are also wanting to little bit keep it on a much safer ground considering the regulatory forbearance out there. As indicated earlier, even before the RBI circular in the commented during our investor call, 1 or 2 instances we will be moving out and which we have moved out. The rest we are doing decent business and we will continue to focus that we have a reasonably good profit, their ROA accretive. So we see that happening. As long as we run it tightly, we should have no major issues arising from that.
Sure. Sir, good morning and thanks a lot for joining in. I had a couple of questions on the vehicle piece itself, right? You spoke about growth over there. But within that, what we are noticing in the heavy commercial vehicle space, for example, is that a lot of these large players are seeing a moderation in growth, whether it's Tata Motors, whether it's Ashok Leyland, even a couple of the other players like Eicher Motors. And they speak about how it could be because of the high base of last year, but growth has moderated in certain segments. It could be led to several factors, especially in the heavy commercial vehicle space. Your thoughts here, and what do you see as the tenure as we move into election season?
See, heavy commercial vehicle is a yield-sensitive product. So when cost of funds moves up, we will have challenges in funding this product at a very low yield, because we will not want to have this product, any product for that matter, being ROA impacting the ROA in a negative way. So at these yields, you will not get more than 2% or 2.5% post-tax ROA. As you know, our target is to have 3.5% ROA, pre-tax ROA. So that's where we have also slowed down, and I presume that could be the reason for some of the other NBFCs coming down. But the banks will still fund fleet operators because they have the power of the cost of funds.
Okay, so banks will fund fleet operators, but you're saying that a little bit of slowdown has happened. What do you think the growth could be for your vehicle segment? I'm looking at AUM growth, sustainable over the next couple of years, both in by the end of FY24 and 25.
See, vehicle finance in our portfolio has a large, gamut of products, right from heavies, lights, mini lights, tractors, two-wheelers, passenger cars, and construction equipment, and used segments in each of these varieties. So, and we have demonstrated over the period our ability to move up and move down the volumes in each of these product lines. So that's what we will be doing. So while we will not have growth levels of 25-30% in vehicle finance, but it will still clock anywhere between 18 to 25%. And there is a very large industry level happening. We don't see that. I think the coming election throws up reasonably good results, and a strong government comes into play. Then we should have a continuing impact, a positive impact of growth in India, and we see that impacting us favorably.
All right, Mr. Selvan, we missed that number. You said the targeted ROA and ROE is? Mr. Selvan?
A full company as a whole. I was talking. Can you hear me?
Yes, sir. Yes, sir.
Hello. I was not talking about the ROAs and ROEs of a company as a whole. I was more talking about the ROAs and ROEs of the vehicle finance, more so on the heavy commercial. Overall, I was telling that the company always targets a pre-tax ROA of around 3.5%. Yes, to that extent, we stick to our level. While we may not, we may be marginally lower or marginally different from our target in this current financial year, but I think over cycles, we should continue to achieve that. And with the new products kicking in, we should improve it in the years to come.
Okay, and finally, give us a sense about how the cost of funds are shaping up, and what should the targeted NIMs look like?
The cost of funds are more or less stabilized. I think we should be at similar levels, and I mean, going by the market news, the expectation seems to be in the second half of FY25 that we can expect some cost of fund reduction. The cost of fund levels and the NIM levels would be at the pre-COVID levels for Chola. So we should be in the range of around 7.5% NIM levels as we move into these levels of cost of funds.
Okay, all right, Mr. Selvan, we appreciate you stopping by and filling us in with that broad guidance going ahead. Wishing you all the best, and we look forward to chatting up with you at the end of the quarterly results as well. Well, for the time being, the markets have taken actually a bit of a U-turn. The Nifty Bank, we had highlighted this earlier, that if the Nifty